Hi traders, welcome to this week's pre-weekly market review by Trade Genius Group. We're looking at the dollar this week specifically, seeing as that is the major focus of this week's fundamentals, and it's kind of in line with the technicals as well right now. So just a quick recap. Last week basically we saw good news out of the US, surprise surprise, non-farm payrolls are better than expected, a little bit under from the revision, but the unemployment rates in the US were looking better. So that's progressive good data there for the US, which is rather annoying really, because we feel that the dollar is very overbought and is due for some sort of a pullback, at least until April time, when they start to look at really pumping up interest rates there longer term. So in spite of that, the euro did have quite a lot of focus last week. Obviously, there's been rumours going around now that we're going to get 500 billion euros worth of bond purchases. That's going to help a lot there with the deflation. And obviously that euro really needs some help right now. It's been knocked down partly because of its own austerity and also not being helped too much in light of what's going on in Russia. We have decided not to focus too much on Russia and oil. We think that whilst it's important to keep up with that fundamental side of the market, we're not going to be trading that side too heavily in any way. And you can see here from the euro, obviously, pretty much a downward market all the way. We've seen a very small glimpse of what could be a double bottom candle on the bottom there, and give us some sort of pullback at least to close the gap that we had following Christmas and New Year's, and maybe retrace towards 123 levels, keeping in line with this Bollinger Band range that you see on the chart in front of you. So without further ado, guys, we're going to look at this week's technicals. We'll start off by looking at the commodities, and then we'll look at the indices, and then some related pairs that we think are of interest. We started here with gold. The gold market is an interesting one, obviously, very much an oversold market for quite some time now. We can see here that recently it's been picking up and getting some interest from prospective buyers just at the lows around 1123, and now we're moving up and steadily towards the resistances at 1300. So we're kind of clear and away from the 1200 mark that everyone was so desperately clinging on to sort of prior to the new year. And you can see here, if we move down towards a daily chart, that basically the next range breakout is pretty much set for this week's market. If we get this breakout, it's going to offer you a good $80 trade. And we feel that the 1300 level is quite a reasonable target with which to be setting potential longer term TPs. Let's move over to the US S&P 500. We mentioned in last week's review that this broke out of the megaphone pattern that it's been following since June 2014, but the breakout was short-lived, and we then had a retracement back inside this megaphone support resistance. So it's interesting really, either that was a failed retest, or indeed this is now set to just simply pull back right the way down and follow the megaphone of 2014. We've yet to see, we've yet to find out, but what's for sure is we're also clinging onto the resistances right now, so it's kind of a make or break in this week's market. We're either going to crash right down and you can be shorting that for quite some time, or we'll see extended rallies on the S&P, and this is the make or break level that's going to determine it for you. We've now moved on. We're looking at a commodity related pair. It's not the Aussie dollar, it's the New Zealand dollar. It's been following a very, very clear range. It's a few hundred pip range, about 200 pip range, and we've now moved from bottom to top, and the 078 level is really looking for a breakout towards higher highs. As soon as we get that confirmation, we're around 07826, and I think that once we start moving beyond 078 30 40 plus, can really start to look at the longer term weekly double bottom that we had around these prices of 0.75 0.76, and see that the longer term resistances are all the way up there back at 0.80, then further more 0.88, but that's definitely looking a little bit too far ahead. So for now we want to focus this double bottom that I've just circled for you, with the potential of the prices moving from 0.7826 towards 0.80 over the next few weeks. Okay. Last but not least, guys, we wouldn't be able to talk about the dollar or any dollar related commodities or pairs without focusing on the dollar yen, the major trade-off between the two safe havens. The yen hugely weakened over the last few years, and now battling with some pre-resistance levels around 120. The major long-term resistance is at 123.66. There is a high probability that it's going to test that level, but if it doesn't, then now's the time for it to pull back. We had a weekly spike 3 weeks back. Since then, the market has pulled back slightly, and if we look at the previous declines during trending markets, you can see here I'm showing you now, they're usually about 400 to 600 pips. These are the bearish pullbacks in the short and medium term along the bullish path of the longer term trend. So if we do get a pullback now from the 122, 121 levels, then we would expect it to move back, 600 pips or so. It brings us down to about 116, 115. We did have a spike test near those levels already, but as soon as we see this market starting to cross anywhere below the current prices of sort of 18 by 18 I mean 118 obviously yen to the dollar there, you want to start shorting that pair for another few hundred pips before considering going long yet again for that ultimate retest at the resistances just short of 125. So that's regarding the dollar yen. Very hard to draw a trend line there. As you can see, we've tried and we've failed, and so we don't think that this is a very reliable pair to be trading in the short term. But long term, obviously, there are potentials there for more bullish rallies. However, the short term is a little bit unpredictable, and in the medium term, you could expect some more pullbacks to the downside on this pair after such a long run of overbought bullish pressure. Okay, that's all we have to say on the dollar yen. We've covered most of the major pairs. It goes without saying, though, guys, that there is a lot of news coming out this week. Specifically, we have dollar news coming out towards the end of the week. Unemployment claims, consumer sentiment. It's always a big number for the US. And on Wednesday, the European Court of Justice mechanism will be coming out with a vote. And that's quite an important vote there for the Eurozone in general and their monetary policies. So you want to have a look on Wednesday's market at that euro dollar, and of course tracking the pound dollar as a pair side by side, that euro USD, especially on Tuesday with the consumer price index in the UK. Okay, so have a great week, traders, and trade safe.